Hello and welcome back to the channel. Welcome back to the second part of reviewing the MIT fund. MIT fund, which is a 2 lakh crore fund, has invested close to 7 to 8 thousand crore, around $1 billion into the Indian market. And in the last part, we were reviewing some of the stocks that the company held. So we'll quickly go through, I think, some of the companies that we saw. So we went a little bit deeper on Antony Waste Management, which it has a 6.93 percentage holding of Antony Waste Management currently, and it has been constantly invested into Antony Waste Management since December 2020. Barbecue Nation. So the QSR segment is something that the MIT fund is bullish on, and it has a 4.05% stake in Barbecue Nation. Calcom Vision is again something that we saw, and it has a significant chunk, 6.81% of Calcom Vision. These companies, mind you, are very small market cap, close to 120 to 130 crore. So very small businesses. Anthony, a very small business where MIT has parked its fund. It's spread its capital across multiple companies, and it's clearly visible. And a lot of times, funds coming from outside FIIs, what we observe is that they stick to the blue chip names, they stick to the big names, they stick to something which is more familiar, an ICICI Bank or an HDFC Bank, something which globally everybody knows about. But MIT fund is different. MIT fund is invested into multiple small cap companies, multiple companies below 500 crore market cap as well. So very different from what the traditional FIIs would be. And here we also discussed Dishman Carbogen, where MIT fund has a 1.95% stake. So what I also closely saw was spirits or alcoholic beverage is something which is big on MIT fund. So they have Global Spirits, 3.81% of Global Spirits, but they also have stake in Radico Khaitan. Radico Khaitan is the same company in which Nikhil Kamath, who's the co-founder of Zerodha, also recently bought a significant chunk. So alcoholic beverage is a good part of the MIT fund. Then energy exchange is another common theme that we saw in the fund. Indian Energy Exchange continues to hold a significant chunk of Indian Energy Exchange, but this might be slotted for change or slotted for reduction given the market coupling scenario that is emanating, where multiple energy exchanges do exist, but all of the energy exchange, depending on demand and supply and depending on pricing efficiencies, have their own prices. With market coupling coming in, all the pricing power of the three exchanges would go away, and this for me does not make any sense, because it would not promote innovation, it would not promote efficiencies within the energy exchanges, and that could be a big problem. We also saw Kaveri seed companies. So these are hybrid seeds that are created by Kaveri seeds and then given to different industries and given for various agricultural purposes. So it has a 5.27% stake in Kaveri seeds. KPIT technology, which builds the technology around inside cars. And MIT fund is also bullish on KPIT technology and holds a 3.11% stake in KPIT technologies. Matrimony.com, now that really jumped out. I've closely been following what has happened to InfoEdge and some of the portfolio businesses that InfoEdge has. It has been very pragmatic in allocating investments in the other entities that there are, and they've also invested in Policy Bazaar, and Jeevan Sathi comes within the portfolio. Naukri.com is doing really well. So Matrimony.com is also venturing into the job portal. So that the name definitely needs to be different for that. So given the success that InfoEdge has on Naukri.com, Matrimony.com is also venturing into jobs, quite naturally so, because the demography of the country is such that a lot of young population and a lot of population entering the workforce, looking for work, and matching of people through matrimony.com might not be as profitable as matching the right candidate with the right job. So in this edition, I think we'll have a little bit of closer look at Radico Khaitan. So MIT has 1.25% stake in Radico Khaitan, And if you quickly go through the numbers that Radico Khaitan has, so Radico Khaitan currently it's operating at a market cap of 27,000 crore. The price has jumped quite a bit. So if you see around July of 2017, the price was around 128, but it has jumped to around 2,000. So basically, there has been a 10x jump since 2017, and the PE also seems to suggest that it's quite expensive. But looking at the other things, I think the growth prospects also need to be kept in mind. PE in isolation, looking at PE in isolation can be a great mistake to do. The PE is given by the market based on the future earnings, and hence the market, what it believes, looking at the PE, is that the future earnings are going to take care of the current valuation. But I, for a personal choice, like to believe that there always needs to be a margin of safety in investment. The idea is to minimize risk while maximizing returns, and hence I like to look at companies. It might be a great business. It might be doing tremendously well. It might be Coca-Cola bottling plant, or it may be some of the macro and micro indicators within the business may be such, and the fundamentals of the business may be such that it can be a great business. But if it's not coming at a great price, I tend to stay away. And um, P is something which I do not look at it in isolation, but I like to believe that there needs to be a margin of safety while investing. On a bridge where 10,000 kgs is allowed, I would like to take a truck which is not more than 6,000 kgs, just to be sure. Um, in terms of the numbers, so ROCE and ROE close to 13.2 and 11.3%. So Radico Khaitan, similar to a segment which I had done on Sula Vineyards, has alcoholic beverages across the range, from the luxury to the non-luxury. So if you can quickly see through some of the brands that they have. So Magic Moments vodka is something that they have. So here, if you see the brand portfolio, uh, luxury, which contains the 50 plus, so you have some of the big names. And Amrut, which is one of the most awarded whiskey brands, is something that Radico Khaitan owns. It also owns Kohinoor Reserve. So you can see the bottling and the way it's presented. Spirit of Victory 1999 pure malt, and a happily crafted gin. So these, so clearly having a gash at the premium alcoholic segment. Magic Moments vodka is something I think is a very smart move by the brand, given the young population that there is, and the young population, in its path of mimicking the Western world. There's going to be a significant chunk of young people who are going to turn to alcoholic beverages, and this Magic Moments vodka caters to that young population. And some of the premium brands, other premium brands that they own is Jaisalmer Indian Craft Gin, Royal Ranthambore, and as I was telling you about Rampur. Rampur is something that it owns. Sorry, not Amrut, but Rampur. And you can see that it's one of the most awarded. So in the New York Spirit Challenge Award 2023, Barleycorn Awards, Ultimate Spirits Challenge. So it's won accolades all across the globe, and it's opened up eyes of the global audience to some of the liquor that is being produced in India. And earlier, the India was nowhere in the roadmap of liquor production, let alone liquor consumption. But now India is not only consuming liquor in a large volume, but also producing some of the top-notch brands which are going on to be sitting in some of the finest places in the world. So here, if you quickly see the margins and those kinds of things, so capital, return on capital employed on 13.2, return on equity 11.3, nothing to write home about. It's decent numbers. Profit after tax close to 269 crore, and the profit growth has been good, around 30%. So if you quickly see the profit and loss statement, here we see that, yeah, the same old story. I think the OPM percentage margin is sitting at close to 12%. This again, I cast my eye on, because I like to have a big margin there. They're very small businesses, so which will have an OPM percentage sitting close to 40 to 50, 50 to 60%. Very small sliver of businesses. Most of the businesses hardly make it beyond 10% OPM margin, and by the time they reach NIM, they are sitting very lowly. So, so here, as we can see, the OPM percentage is close to 12%, and the net profit is sitting at close to 269, and on a revenue of 4,300 crore. So, lots of expenses, lots of distribution channels that needs to be catered in, lots of depreciation of machinery that is there. So hence reducing the profit after tax. So, but the demand surge is impeccable. If you see how the stock price has done over the last 10 years, 5 years, 3 years, or 1 year, you pick up any of the indices, whether it's the last 10 years, is then 38%. For money to double in 3 years, it requires 26%. And if we do three doubles, right? So 9 years, so close to 2 to the power 3, that is 8. So every 1 crore invested in the last 10 years would have been 8 CR, and we saw it in the price action as well. But this is 38%. This is even greater than 26%. So this should be close to 2 years. So rule of 72 says that 36% would double the money every 2 years. So this is even less than 2 years. So if over a 10-year horizon, we are looking at close to 2 to the power 5, 2 to the power 5 is 32. So every 1 crore invested in the last 10 years has grown to 32 crores. So that's some impeccable numbers. So definitely the stock price is running away. The return on equity is not that great. The compounded sales growth is okay for now. I think 3%. Yeah, that looks fine. The OPM percentage margin is not that great, but the stock price has, I think, gone way higher. And personally, it's not a stock recommendation, but the price has seemed to catch up with what the earnings are. So definitely, I would like to see higher earnings before forming a comfort level on these numbers. So somebody who believes that the earnings are already suppressed, given the high demand that is gonna come in the future, and given the product launches, and if somebody wants to go deep into this, can then analyze as to how this can be a very good stock pick. So if you look here at FII, so definitely MIT is one of the FIIs, but some of the other FIIs that are invested is BNP Paribas, Think India Opportunities, Master Fund, Small Cap World Fund, and the likes. And in terms of the public, we have one of the marquee investors, Mukul Mahavir Agarwal. He has a portfolio size of close to 2,000 crore. Don't catch me on the exact number. You can research it and put it on the comment section below, but approximately it should be in that range, a little bit lower or a little bit higher. But do let me know in the comment section the exact number that there is. But he's invested into Radico Khaitan along with Nikhil Kamath as well, but maybe Nikhil Kamath's stake is not as high as 1%. So it's not showing. Oh yeah, here we see Zerodha Broking, so 1.04%. So yeah, so it is showing. So 1.04% of 27,000 crores, so close to 270 crore he is invested into the stock. Yeah. So that was about one of the companies that MIT Fund has on its radar, and as we discussed earlier as well, so Global Spirits it's been bullish on, and then Radico Khaitan is something that it owns as well. What it also owns is something really interesting. I think I saw was Snowman Logistics. Now, cold chain storage and cold chain logistic is going to be a huge theme moving into the future. I did a part on Gateway Distriparks. Gateway Distriparks is one of the promoters of Snowman Logistics. So if you see here, the shareholding pattern, 46.43% is owned by Gateway Distriparks. And I was looking at the interview of the management of Gateway Distriparks, and they were mentioning that the cash that is accruing on the businesses, they would keep shifting it back to Snowman Logistics, and it's quite evident as well. So since March 2023, it held a 40.25% stake. And when things began to turn around for the business, it has constantly increased stake. So it currently is a holding company, but it wants to own more than 51%. It's clearly mentioned it, and very soon, I think in a span of 1.5 year, it should be one above a 51% stake, looking at the trend that there is. So right now it's sitting at 46.43%, but the trend is moving upwards. MIT fund has 1.68% fund, and if you look some of the public investors, Vijaya S has 1.55% stake. Snowman Logistics, now we'll look at a little bit more in detail about the business. So Snowman Logistics serves it is India's leading cold chain logistics company, and the temperature control that it has and the value chain that it has is from minus 25 degrees centigrade to 25 degrees centigrade. So everything to do with your cryogenics and some of the artificial insemination for cattle, or your perishable items. A lot of the perishable items, banana and ice cream and processed poultry. And so one of the big companies to do it is Snowman Logistics. India has a huge logistical challenge given electricity and those factors. So a company really needs to be large to take advantage of the business, because it needs to be able to invest in generators, and a lot of capital needs to be put in before it sees fruits of its labor. As we can see that Snowman Logistics is the largest pan-India cold chain network. It has planned expansion basis the customer's requirement to address the demand of the organized sector. 25 years of experience, Snowman has innovated best practices and knowledge leader in the industry. So we'll quickly see the performance highlights for FY24. And here the numbers are in lakhs, so we need to see it in two decimals. So here in FY24, it did a income of 510 crore, a revenue of 510 crore, and the preceding year it was 42.5 crore. So it was a growth of 20%. But from FY22 to FY23, there was huge jump that we saw. So from 290 crore, it jumped to 425 crore, which was a growth of 46.5%, and EBITDA margins is hovering in the range of 21.2 22.6%. So EBITDA margin, when somebody says EBITDA margin, and EBITDA is nothing but earnings before interest, tax, depreciation, and amortization. And not like the cash flow, the positive cash flow, cash flows will be impacted by interest, tax, depreciation, amortization. So whenever a management does show EBITDA, you should know that the margins are not that great, because if the margins were great, the EBITDA margins would be not shown. EBITDA margin is shown because, and here we can clearly see that on a sales of 515 crore, it is doing a net profit of 11 crore. So I don't know what MIT saw in this, but definitely like such a huge chunk of business. So generating such small net profits is something doesn't make any sense to me. But obviously you're looking at a decadal viewpoint, so the viewpoints may be different. I might be looking at it from a 3-year horizon or 2-year horizon, but MIT fund might be looking at it from the next 15 years. So it might want to park its funds for the next 15 years, and it might think that the 11 crore that is generated out of the 515 crore of revenue is significant for it to be invested. And also given the unique proposition of the business, and how some of the small players might dissipate and the big players might continue to dominate and continue to gain market share, and there would come a time that the expenses that have been incurred on the books might the depreciation may be written off, and the expenses might last for much higher than what the depreciation write-off would be. So that also would make the numbers look good. Pricing pressures might be there right now, and pricing pressures might ease up, or given the tout of the business, given the ability of the business to hold on to the prices or increase prices abnormally by 10%, 15%, that also might be the case. So MIT might have insights which I don't have currently. I haven't gone into the detail of Snowman Logistics, but it would be interesting to see how Snowman Logistics plays out. Moving on to the next company. So Star Health Insurance. Now, Star Health Insurance, Snowman came in on March of 2022, and it is still holding on to the share that it has. Star Health Insurance. So one of more of the marquee investors that there is Mr. Rakesh Jhunjhunwala. So he will not come in the public part, but on the promoters part. So he owns close to 17% of the company, and he did a deal where he brought the 17%. Star Health Insurance is an interesting case because there are definitely tailwinds for health insurance companies in the future. Right now, the business might not be looking that attractive, and in terms of the price, also it has not done that well. But that should mean that this business should continue to see good growth. So as we can see, the price to earnings is sitting at 40.6. So really, the market is not that bullish on the stock, and not projecting it to generate very high levels of revenue or profitability, and it's not fully priced in. It looks like return capital employed and return equity is decent at 17.7%, 14.3%, and insurance as such is a very um, push product, so it really needs to be pushed continuously to be sold. And also one thing about health insurance companies is that once the book is written, you really would know the loss ratios coming in from the third year onwards, because that's when the waiting periods kick in. For some policies it would be 2 years, for some policies it would be 3 years. So once the business is written, so for example, if the business is written in March of 2024, suppose 14,000 crore of business is written in March of 2024. So the profitability of this business will really come in the next 3 years. It would start showing in the next 3 years, because initially the loss ratios would be very low, because there will be restrictions on claiming certain items related to heart attack, heart issue, kidney issue, liver issue, or whatever there is. And then once the waiting period is over, all the floodgates open to a large number of claims, to a large not only frequency of claim, but also large claim averages, and which then goes on to then have an impact on profitability. So that is how health insurance business is structured. Here we can see that there has been a 22% growth in the premium that there is. So in FY20, 6,862, and from FY20 to FY24, the company has seen a 22% CAGR growth. It is the number one in standalone health insurance. It has 17 crore plus lives covered from inception, and 1 crore claims settled since inception. It is a market leader, 33.1%, and it has a strong growth, which is registered higher than the industry. PAT growth is also looks good, 37% PAT growth, but there's an element within the PAT which is called the reserves. Now the reserves is very subjective in nature. So ideally, if all the ethical practices are being followed, and the reserving is done properly, then the reserves would be higher. If the reserves are higher, the profits are lower. And that's where the tussle is between the appointed actuary and the CFO, that the appointed actuary would want higher reserves, so that it protects its shareholders from um, liquidity issues in the future. And the CFO would constantly want profits, so it would want to reduce reserves so that it can show a very pretty face in the shareholder meetings. So that is the dynamic of the health insurance business. I'll wrap my uh, this edition here. Please do let me know in the comment section what you think about the analysis, and also let me know some of the other big FIs you would want me to track. I think MIT is something which I do track, because I like some of the ideas that it has picked, a couple of ideas that it had, even I had for some time. So I like the thought process that they have behind it. Obviously, I don't like all the companies, but blindly picking up what they have and then putting it into your portfolio is not a great idea to do. The great idea would be to basically take the seed, or to take the idea from here and then do deep research, and then get into the stock if you want. But also constant tracking is also very important, and it's just that I happen to find it a joy to do constant tracking, but a lot of people don't. So for them, I would advise to probably stick to indexing or mutual funds where without a lot of fund management charge. So that's it from my side on this edition. Hope you have a great day ahead. Thank you. Goodbye.